behalf of CrossCheck Media and Biz Talk Today TV, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I'm joined by my friend and co-host, Tobin Smith, out at sunny and I guess cool Scottsdale, Arizona.
Listen, I'm wearing this for the people in North Carolina, like our guests, who have snow in their yard. And for my friends down in New Orleans who have like 8 inches of snow in the quarter. I mean, this global warming stuff, there may be something to it.
Pensacola, Florida has 10 inches of snow, beat a record that was established in 1895 at only 3 inches. So, yeah, global warming, wow. My ass. But with us today, we have Scott Ladner. He is the Chief Investment Officer at Horizon Investments, coming to us from snowy Charlotte, North Carolina.
That's
Scott,
right.
welcome
That's right.
to Buy, Hold, Sell.
I appreciate that.
This is the only jacket that he has, Scott.
Yep.
Absolutely. So listen, Scott, it's the Trump trade. The Trump trade is on. Donald Trump's been in office for 2 whole days, and we've seen the stock market just shoot to the moon. Yet you have now the Fed starting to say, yeah, we're not even going to cut rates. It doesn't matter. Traders love equities. Everybody's bullish right now. What's your take right now, though? What are you telling your clients? Is this just short-term optimism, or is this the way 2025 is going to be?
Look, I think it's probably a little bit more how 2025 is going to be than short-term optimism. If you harken back to like year one of Trump one, 2017 obviously is a great year in markets. But essentially we traded deregulation and taxes first. Like we waited till 2018 to trade tariffs, and that was a little bit of a problem.
Yeah.
But we really kind of year one Trump one we traded dereg and taxes, and it was great. If you fast forward to this time, we can still trade dereg, which is going to be a big deal. Like that's a big deal. But I think we're going to have to replace the kind of the tax trade and sort of the tax benefit, just because taxes aren't going really anywhere. We're going to replace that with animal spirits. And you can see that from M&A activity. You can see that from CEO confidence. You can see that from small business confidence, like the NFIB survey. I think you're going to see just a lot more of that type of animal spirit type of thing take hold. And Druck came out the other day talking about, he talks to CEOs a bunch, and we're going from the most anti-business administration in history to the opposite of that. And I think that was a pretty telling quote. I think that part is going to end up mattering a lot, and that's what I think we're starting to trade a little bit. Despite the Fed, kind of dancing on the political, high wire a little bit.
You see, he was worried about his words, Todd.
I'm just trying to find the words you're talking. Like sometimes it's hard for me. I talk too fast sometimes. But look, I think this is not only do we have some of these animal spirits, not only do we have like incredible economic growth and consumer and businesses that are in great shape, but as Tobin and I were talking about earlier before we started the show, this AI tailwind and the technology tailwind we've got is massive. AI is him, and we've got it. Everybody's got to get on board with this. Everybody's got to understand what it does to productivity and profits and profit margins, which are exponent, which increase stock prices exponentially, not linearly. This is a big deal. So there's just a lot of tailwinds at the back of this. Not to say there's no challenges ahead, but the tailwinds are pretty darn big.
Yeah, yes, and yes. I think what's again sort of interesting is also, in my opinion, from my friends who work with Mr. Trump, etc. He was talking 50% tariffs, Canada, Mexico, China, whoever. And then the next day he came out and said 10% tariffs.
Yep.
So that was, to me, the most bullish part of this was if you took that overhang. I mean, I don't have to go back to the Depression where we, the Taft-Hartley Act, and shockingly we had a depression because of tariffs. But the 10% number just reminds me of how I've learned after interviewing him for Fox Business, etc. Take him seriously, not literally, and that is how you're going to. I think your investors should should navigate this world. Number one, and number two, $500 billion into Stack or whatever the hell it is.
Starlink.
Not what?
Starlink AI.
No, it's not Starlink, you bonehead.
Yeah, they get it. Whatever. It doesn't matter. Yeah. It's a big deal.
Well, not only is it a big deal, I mean, it's ridiculously big deal. You run these mutual funds I want to be the manager of the AI tech data center tech stack for you, because as I was bragging to him beforehand, our portfolio is up 12% today. Why? Because every part of the AI tech stack is on fire, and it's on fire because of $500 billion there, and another $500 billion in Europe, and another $500 billion in China. And this is I'm in the transformational change business. This is the second largest transformational change I've ever seen. And then, hey, NVIDIA is not expensive on a forward basis. Vertus is not, or VRTS, I'm sorry, is not expensive on a forward basis. And then, of course, we have the fact that 8 stocks are now responsible for 55% of the S&P 500. So what are you going to do? Become a value player? I'm asking you, Mr. Fund Manager.
Yeah, look, value's been challenging. Like, luckily, we're not value managers. Look, I mean, I think value's got its place, but for value to work, you have to have this, like, the cyclical parts of the economy working. The cyclical parts of the economy, it hasn't been what's driving this train, as we all know. I mean, what's driving this train is the tech trade, the AI stuff, and all the productivity enhancements that are coming out of that. And so, yeah, I mean, like, look, where there's probably a place for value, and like value has rolling portfolios sometimes. You just need a big, huge nominal growth story to get value stuff to really hum.
Yeah, and you got to go with the dance with the girl you brought, right? The AI, the whole spectrum of it is, global. That's the other thing about this. It's just like when that .com craziness went. Remember when Sun Microsystems, went from $8 to, I don't know, $525, or JDS Uniphase, my favorite of all time, $16 to $795. Boy, those were the days, huh?
Right. Those were the days. It's actually called Stargate AI. And Scott, I know you can't speak on individual equities, but we did see Oracle, SoftBank, companies that are involved in this plan. Really, they did very well today, following news from the administration. But let's say AI is a sector, though. Today, with that news, $500 billion. I mean, it's huge amount of money. And who knows, that could just be the start over the course of 4 years with this administration. Are you fielding calls today from clients that are saying, look, give me some exposure in this area?
Yeah. So yes, but nobody knows how to do it. I mean, I will say that,
like I said, right here, I know how to do it. I should be running one of these funds. Go ahead.
We do actually have a pretty significant what we call an AI sleeve in one of the funds. That's a pretty material like a piece of our portfolio. And luckily we put that in like basically the beginning of last year. And we got a couple guys that are looking at that all the time. And really, like if you think about like kind of phase one of internet or of internet, phase one of AI, like it's what everybody knows. It's NVIDIA, right? I mean, like that's phase one. Is like get this thing. You got to get these things to make the whole world work. But that's kind of the most boring part of the story. The more interesting part of the story is kind of what we're starting to go through right now. Is like who's gonna actually use this stuff? Like what companies are gonna be able to leverage it? What companies are gonna like outside the hyperscalers, like which ones are actually gonna be kind of just most able to leverage the technology to improve margins, essentially. Like that's kind of it, right? And so that's those sort of like the second and third level down players are really what are starting to work now. And that's like kind of doing that work and getting ahead of that game is obviously a big part of it, but it does take a fair amount of work. It does take a fair amount of specialized knowledge to actually go in there and figure out which of these companies in industrials or in healthcare or in biotech or in like name your sector. Like there are some companies in most of those sectors that are doing some of this cool stuff, but you got to go in there and figure it out. I
mean, the other way to say it is now the word for 2025 is agents, AI agents, agentic computing. But if you just start at the people who are already enterprise platforms, ServiceNow, Workday, Microsoft, Salesforce, they lagged for a while because people couldn't figure out what was going on. And all of a sudden now they've really started to move. Then you go down the stack on just to cybersecurity, and there is no AI without cybersecurity, because you want to hit a mother load of data. Is dive into IBM's entire business on computer and see what happens, right? So that then becomes a big issue, and then you get to the smaller side, the really specialized stuff. Because I'm totally with you. We had Eddie Ardeni on a few weeks ago, and he makes the point that I've been making, which is if you move the productivity level of labor 2%, how much of that goes to the bottom line, to your point? And so I can tell you, for me, as someone who writes content all day long, research content for investing and macro and micro and all the other shizzle, that if Monica wasn't around to answer my questions, I would take me twice as long. Monica is Google's, AI. It is fan-freaking-tastic. Yeah. And it's all that little minutia stuff. When you're writing your reports, you're saying, what was the Federal Reserve rate on June 1st, 1982? 17.5% was the 10-year. Oh, that's right. It just makes it. So I'll tell you what we've been reporting on, and other people have been reporting on. Guess who's losing jobs? It's financial analysts in Wall Street. Way back in the day when we used like an abacus, like when I was there.
An abacus.
Yeah. We did it by finger. You just move it that way. You had like two assistants. One just to read all the goddamn, documents and then, highlight them for you because nobody could read that stuff. And then the other one is that was before spreadsheets. I know it's hard for you to understand, Todd.
What? A spreadsheet? They've always been around.
Yeah, right, exactly. So now take that linear force and say, geez, out of the 34 positions we have, which are mostly the technology, data, AI stack, and we're up 12.5%. Thank you very much for doing well in the after hours. Which were the best ones? Why did it move? What are the ones that didn't move well enough, that don't have the characteristics, and which one should we sell? And now I do that in asking AI that is trained on our portfolio. Sorry, Mr. Junior Financial Analyst that went to Harvard.
Yeah.
You need to find a new gig, brother, sister.
Now, there you go. So, Scott, before we go to the break, I want to ask you, though, with the portfolio makeup, are you structuring the portfolio to be just a heavily concentration on large cap stocks, or are you looking maybe on the mid-size or even small caps?
So yeah, we're actually in that particular fund, we've got a little bit of a barbell going. It is definitely a pretty healthy size positions in what we consider to be an AI portfolio. And we definitely have we've got some small and some mid. And believe it or not, like this is a global fund, so we do have some international, even though we are overweight US. But the parts of the market that we're really kind of shunning is we're kind of shunning quality. Like as a factor, the unique quality.
Oh, the quality factor.
Yeah, when things are kind of going crappy, or like you're kind of worried by the world, like quality is you want strong balance sheets, you want that kind of quality financial metrics. Like we don't think you need those right now, to be perfectly frank. Like we think that's there's a time and place, but this just is neither of those for right now. So we're kind of tilting a little bit more towards momentum, a little bit more towards the large cap tech, and with some ballast in the small caps, just in case we do get thrown in that cyclical rally, because we don't have a whole lot of value in the portfolio. If you do get that big cyclical rally, we think that that we can essentially have an efficient capital allocation to small caps to keep us up on a thing like that. But look, the bets in the portfolio in that particular fund, at least, are definitely more centered on the AI trade, most likely.
Good luck on the small caps coming around. Quick question. The Fed is pretending like, we have inflation coming back because of tariffs. And they only have one rate cut, scheduled for the rest of the year. Does that affect your judgment at all?
It definitely clouds it. I'm not gonna lie. Like we thought we had a pretty good beat on the Fed coming into the December meeting, and then
me too.
The troubling, the most troubling aspect of that entire thing was they put out this summary of economic projections, and as part of that, they say, listen, we Fed members, do you think that the inflation? One of the questions is like, do you think inflation risk is like balanced or like weighted to the upside or weighted to the downside? And in September, they basically everybody said we think inflation risk is balanced, and then in December, everybody except for like one thought that inflation risk was to the upside.
Yeah.
Now what happened? in between those two. Like
The T-man happened.
The only thing that happened. Like, so it's, there weren't data out there to support something like that. There wasn't anything that happened out there that supported that. It was just now inflation risks are weighted to the upside because, it has to be because of Trump and perceived and policies that he may put in place or may not, because as you said, earlier, I think, pretty wisely, like, you listen to, you believe him, but you don't listen to him and take him literally necessarily all the time. And that's, but the Fed people look like they took him literally, and they're trying to price in unspoken policies yet and into their sort of rate projections and into their forecasts. And that's just very confusing, because we don't know what these policies are yet. We'll find them out, but we don't know them yet.
You're zagging. I will say again that some cooler heads did prevail. Set Mr. Trump down. Now, he doesn't drink, so if it was a normal president, you'd have a big cocktail and you'd sit him down and you'd say, now look, you're not doing 50% tariffs. Here's the 1920s. Remember those times? Because you were probably that alive then. And it's a worldwide depression if we do this. So don't do this. Don't talk about doing it. Get your head on straight. And I've interviewed him many times. He'll actually listen to you if he thinks he can get something out of you. And I'm sure some people, said, hey, man, you're on a roll. Let's not F this up, because the trade war, for all the obvious reasons, would inflame inflation in every part of the economy. And weren't you elected because people are really tired and bitchy about inflation?
Yeah. Yeah. No, you're right. You're right about that. But you know what? He's got 4 years. I mean, this is day number 2.
Yeah, I know.
He's got a full day number 2. I guess you could somebody say it's day number 3. He's got plenty of time to worry about the tariffs, but we'll worry about that later on. But listen, we're going to leave it there on this block, guys, because coming up after the break, we have to ask Scott. We already know.
Easy for you to say, Todd.
I know. We already know Scott loves tax. But what else does he like? Are there other sectors that you should also maybe take a look at in 2025? So with us today is our featured guest, is Scott Ladner. He is the Chief Investment Officer at Horizon Investments in Charlotte, North Carolina. And we'll be right back after the break. Please stay with us.
Buy, hold, sell, brought to you by CrossCheck Management.
Welcome back to Buy, Hold, Sell. Well, I'm your trader, Todd Schoenberger, and with us today we have, and Tobin Smith, obviously, is co-hosting, but with us today we have Scott Ladner. He is the Chief Investment Officer at Horizon Investments, located in Charlotte, North Carolina. You want to go to horizoninvestments.com to learn more about his firm. And Scott's also a high-ranking official at the business school at UNC, University of North Carolina. And Scott, I think I read somewhere there's a new football coach, I think, that just joined UNC.
Yeah, some guy named Bill. Bill something or other, rhymes with Check or something. I don't know.
Yeah, I thought it was Bill writes checks.
Something like that. Yeah, I think I read about it in the New Yorker. Yeah, so who knows, but definitely it's a football school these days, which is wonderful. But Scott, when we left off in the last block, we were talking all about tech. Obviously, it's a big sector. Everyone loves tech right now, especially the Mag 7 stocks. But what do you think for 2025? You have a new president now, lots of pro-business initiatives that are taking place in Washington. Are there any other sectors that you may consider for your clients?
Yeah, look, I mean, they're like, if we're going to like kind of turn us over to the sort of the value side of the world, in terms of the value part, like financials for us are sort of interesting. And I like, you guys haven't known me for that long, but like my history of financials is I hate them. I've hated them for like 30 years. I almost never liked them. But right now, like we actually kind of,
because interest rates were coming straight down for 30 years.
Yeah. It's a little bit of that, a little bit, pretty heavy-handed regulation there for the last 15 years or so. But right now, with the what is going to be a very light regulatory touch from the Trump administration, and pretty pro-cyclical sort of economic policies. Bank lending is starting to turn up. Their net interest margins are going to be fine because rates are about where they're going to be. Like we're not, it's going to be right around here. So we're not going back to 0 again or 1%. So they'll be okay on that side. And we actually like the kind of smaller side of the banks because we do think the big boys are going to need to try to organic growth's tough for them. It'll always be tough for them. They're just so effing big. But in terms of like gobbling up the smaller guys to get some inorganic growth going, that game is back on. Like the M&A game is back on, and like M&A, if it's going to happen anywhere, it probably could be in financial services because we haven't had hardly any M&A for like 10, 15 years.
Well, we haven't had a friendly administration towards merger and acquisition.
We haven't.
Because concentration in banks is bad. Oh, really? Can you tell me the last time a major bank went bankrupt? Little Silicon Valley Bank was a little peepsqueak, right?
Yep.
No, I'm totally with you. We own Goldman Sachs, we own Morgan Stanley, we own Jefferies, we own Stifel, the smaller guys, just simply because there's no question that there's going to be IPOs for, God's sakes, which, by the way, they make an incredible amount of money on doing, financing them, underwriting them, following them. That's a great deal. And then if interest rates 10%, the 10-year comes down somewhat, then they still have these big spreads on what they're paying in interest and what the cost of money is. Why not? They're a money printing machine. And I even own Citibank, and I said I would never do that in my lifetime, but they now have operating leverage that they never had before. So
they do, yeah. I mean, the operating leverage is a big deal, and so that's like those we think are can be actually attractive for the first time in a very long time. Like outside of those titles, it'd be like kind of like more niche sorts of industries like aerospace and defense, like a little bit obvious with the Trump thing. But look, like we know defense budget's not getting cut, but it's more from like. What if he's able to bully Europe into boosting defense budgets? What if he's able to bully some of these other countries into really boosting the defense budgets? Where are they going to buy from? Like they're going to buy from us. Like so like in terms of the aerospace defense thing, it's not necessarily what the U.S. budget is going to do. We kind of know that. It's really like if he can bully some of these other countries into really meaningfully increasing their defense budgets. We don't see that as in the price right now. For a lot of these companies, so that's a sort of interesting one, and then like biotechs, it like sort of a quasi AI play. If we think that AI, like what I think one of the really cool things that AI is going to end up doing is really enhancing drug development and drug research, that kind of thing. From a biotech standpoint, there's going to be some winners that come out of that space. I'm not personally smart enough to figure out which ones they are. So we probably play that more from a kind of an ETF standpoint or a sector play than trying to get individual ones. But if people have the time and expertise to figure out like where which of these kind of smaller biotechs are really getting on the AI train, really using this stuff smartly to aid in drug development and to speed that R&D process along, that to us I think is a really interesting space as well.
Well, so I'm on the board of 2 biotech companies, and they're both 100% based on AI, but also quantum computing.
That's cool.
So if you combine it, then you absolutely get new molecules. Because the issue is in the drug business, there's like 10,000 chemicals. They mix them all up, they see if it works. But if you do it atom by atom, your molecules, you're like a trillion, billion, trillion. And that's really where the breakthrough is. Literally, it's that number. It's 12 to 2x of 12 times what I'm trying to say, 12 to the 12th power of molecules. So crazy. That will absolutely change. And we, one of the companies, Version, private company, has 16 drugs in the pipeline, all developed in a lab with no NVIDIA chip at all, CPUs in their own software. You're going to see this, Scott. There's no question about that. And there was a big announcement today with a couple other companies that are also sort of doing it, bit by bit. It's not going to happen overnight, but it will make a big difference. And people will talk about it. The other reason I'm saying this, guys, people will talk about it like their AI works. Well, guess what? In the drug industry, it costs $2 billion to get a drug started and then to fail, and they fail 98% of the time. So if they could get that down to just failing 90% of the time, that would be an order of magnitude improvement. So that's where you're going to see that incremental change. Okay.
So Scott, one of the things with President Trump during the campaign, he talked about drill, baby, drill. Just wants us to start drilling for oil and make that into a national security issue as well. What are your thoughts on the energy sector?
Yeah, so actually, it's the exact point. It's the exact reason why I don't like the.
I don't want it.
So drill bay drill is great for the country. It's, I mean, it's great for kind of growth and national security and all these things. It is not good for the price of the commodity. And therefore, in terms of like making it go up,
Yeah.
whether we're talking gas or oil or whatever it is. And like, look, so it's not good for the equity value of the companies that are selling it. And so it's, while drill baby drill thinks like people think that should be good for energy because Trump's all about energy, all about oil and all this stuff, like it's really not good for the equity securities of those companies necessarily. So yeah, but that's actually that and staples are our two kind of least favorite sectors right now.
Yeah, well, even though you didn't go to UCLA, I respect your judgment on that. Because, oh my gosh, my friends in the energy business, God, their heads explode when they hear this drill baby drill thing, which basically means oil prices and nat gas prices are down, baby, down. And there's a break-even point when you drill for oil these days, because you're not drilling, you're fracking, for crying out loud. And at like $2.80 a barrel of natural gas, they start losing money, and they're not about losing money. So then the really, really big guys would come in, and maybe we get an M&A cycle to buy some of these Permian Basin players. And it will bring inflation down that's related to energy, which is good for the Trump system. But I'm totally with you, man. I'm not short energy, but I'm certainly not long.
Yep.
Yeah. Yeah. Hey, Scott, one final question before we conclude the show. So I know we've had you on the show many times before, and we've brought up the subject of Bitcoin. I know you can't speak on Bitcoin, but I want to ask, are any of your clients asking about Bitcoin or maybe some of the other cryptos, especially with the run up that we've seen over the past couple of months?
Yeah, actually, since Bitcoin's not a security, I can talk about Bitcoin.
Right.
So it's look, Bitcoin's really interesting to us. It's this is one of those where if you take the word Bitcoin out of the question, and you say here are the sort of the financial characteristics or the mathematical characteristics of this thing, it is not really correlated with anything. It has you can make a cogent case that it goes down by 90%. You can make a cogent case that goes up by 1,000%. Like I can make cogent cases for both of those things. And like, does this thing that has those characteristics deserve a place in a portfolio? And I'll tell you, like mathematically, the answer is like unambiguously yes. Now sizing,
because it's not correlated with stocks.
It's not correlated with stocks, and the right tail is massive.
Yeah.
So like those and it can go to zero. You can lose it all too. But the right tail being that massive and the uncorrelated nature of it, it will have like it does good things to a portfolio statistics. And so but we're talking like 1%, 2%, 3% kind of like we're not talking like real big percentage, because you don't want real big, you don't need it to be massive to really have a meaningful impact with the sort of the characteristics that it's got. Mm-hmm. But when we're talking to folks and when we're thinking about it with our own portfolios, frankly, the way we think about it, we think about it as risk managed Bitcoin. So you can apply some sort of risk management techniques to help you like kind of avoid the really, really bad outcomes. And so we think about it in those terms, but we do think it deserves a role in portfolios, but really on that kind of 1%, 2%, 3% sort of order of magnitude. And that's because that's really, we think, all you kind of need to get the benefits out of it.
So what you're saying is that you're not going to be buying fart coin.
I wouldn't buy anything that had the word fart in, because I wouldn't be able to say it without laughing. So.
I tried to say it seriously. I just couldn't hold it.
That's great. Well, and we know that you don't like the financials, so we'll put that in your file as well. So that's good stuff. So
hey,
Scott,
by the way, if you're a hodler, I can send you down the street to my neighbor who just built a $6 million house because he has $72 million worth of Bitcoin, okay, that he bought like 14 years ago. So
incredible.
There is something to it.
Yeah, there is. Definitely is. There's no doubt about it. So listen, guys, we're going to conclude it there. So thank you once again, Scott, for joining us today on Buy, Hold, Sell. Excuse me. We can't wait to have you back on again, especially next quarter. We want to follow up on this discussion.
Go.
That's Duke. Perfect. Appreciate it, man.
Go Duke, except against UCLA.
Oh, come on. No. How are we doing this?
So on behalf of Scott Ladner and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, hold, sell, brought to you by CrossCheck Management.
I want you to smash that like button.